Things are getting interesting, guys. We had a couple companies report earnings after the bell today that I want to break down in this video. And of course, we'll break down some other companies that didn't report earnings. We'll take a look at a bunch of charts, talk stocks in general. So let's just dive into it. If y'all find value, hit that like button, make sure to subscribe, and don't forget to get up to 15 stocks from Moomoo. It is free money using that link down below. We'll talk more about that later. And now let's dive into it. Starting off with Netflix, ticker symbol NFLX, that reported earnings after the bell. And let me tell you guys, this thing is moving all over the place. Well, actually, now that I'm looking at it, it's consolidating pretty much right now. At least it has been over the past couple of hours. But when the earnings initially came out, look at this, guys. This thing ended up collapsing from $334 where it closed all the way down to $290. That is insane. Look at that. And talk about a V-shaped recovery. I mean, look, we went from $335 to $292. Then we snapped back all the way to almost $340. Yeah, talk about volatility. So this thing initially dumped about, let's see here, 13%. Then it rallied 17%, and it took the highs out from today with that pump after the bell, guys. And now we're consolidating pretty much right where we closed at about $333 to about $334. That's where we're coasting at right now after the bell. So Netflix ended up reporting $2.88 in EPS, which beat the $2.86 estimate, but they miss on revenue, $8.16 billion versus $8.18 billion estimated. And they saw Q1 global streaming paid memberships right around 232 million, up 4.9% year over year. Not too bad. And in terms of guidance, guys, the guidance, well, it wasn't that great. Probably why the stock initially ended up dumping about 13%. They see Q2 EPS of $2.84 versus the $3.05 estimate, so that's under the estimate. And they see Q2 revenue of $8.24 billion versus the $8.48 billion estimated. So they beat EPS and revenue for the last quarter, but for the upcoming quarter, revenue and EPS, it is under the estimate, which is not the best sign. And again, that's probably why the stock ended up collapsing. But at the end of the day, guys, does it really matter? Because we V-shaped recovered, and we recovered all the losses. So we'll see how the stock moves tomorrow. But overall, now it's actually creeping up a little bit after the bell. Or actually, I mean, now it's pretty much at break even. But at one point, it was up after the bell, which is pretty nutty. Again, talk about volatility. So in the short term, I'm looking to see if Netflix could retake $347, $350, which you guys can see if I zoom in a little bit. That's been the high for the past couple of weeks. Really, all of April, we've been failing at about $347, $350. We tested that level time and time again, and we failed, so we have to break out, or at least I want to see it break out before I consider taking this trade on Netflix. And if it does take out $347.50, I'm thinking $360, maybe towards $370. That's where it could be going next. Those are the next, two gaps that I see here on the upside. So that is NFLX. Keep your eyes on it. My alert set at $347.50. I might as well put another one at $342, which is right by this 50 SMA on the 4-hour chart. Let me do that now. Mark is at or above $342. And we also had good old United Airlines report earnings after the bell today as well. They ended up going up 1.6% on the day. And here after the bell, let me see how this stock's been doing. So it initially shot up to $44.75, which was a pop of around 4.5%. Pretty big move after the bell. Now it's pretty much coasting right around $43.70 to about $43.80-ish, right? It's been there for the past couple of hours, and it is holding trend here on the intraday chart. You guys see that, which is a really good sign overall for the bulls. So UAL holding trend is popping up after the bell. Very good sign. And we do have a head and shoulders. I'm not going to lie, guys. Look at that. We have the left shoulder right here. We have the right shoulder here. Then we have the head right here. And we're still technically under the neckline, which is not the best sign for the bulls. But if we do start to break out, let's say above $46, maybe even higher than that, that is where the neckline will break, the head and shoulders will be out the window, and we could start running back to the 50s, low mid 50s at that point. So UAL ended up doing EPS of negative 59 cents, so they lost money on the quarter, which beat the negative 73-cent estimate, which is great. And they ended up beating on revenue as well, $11.43 billion versus $11.42 billion estimated, and they see Q2 2023 EPS of $3.50 to $4 versus the $3.65 estimate, which is good. That's good, guys. They're guiding up on EPS for the next quarter when they just had a negative EPS quarter. Now that I'm looking at it, the quarter before this, they were actually profitable, and the quarter before that. So I'm actually curious why they're losing money this quarter. We obviously have to dive deeper into it to find the answer to that question, which we don't have time to do that in this video. But overall, $46, that's where my alert's at, right at the neckline of the Head and Shoulders. Let's see if this is able to break. If it does, if it's able to break, that'd be very good for the bull. So the next one here, guys, is ticker symbol IBKR, Interactive Brokers, which went up about 1.1% on the day. And here after the bell, well, it is not looking that pretty. We're actually moving down after the bell. When the earnings came out, this thing went down to $78, guys. That was a dump of around 7%, and now it's at around $81, down about 4% here after the bell. And it does look like we are starting to break trend ever so slightly. And I guess a good sign for the bulls here is the fact that we are still technically holding the uptrend, but at the same time, we're making these lower highs. We've put in 2 lower highs, distinct lower highs here on IBKR, so it could go either way. Do we end up dumping under this wedge, or do we break out? Maybe we take out $85. We start to take out, or rather go towards $90, right? That's where we could go if we start taking out 85. So I'm going to set my alert at $85. We'll see where it goes from there. Mark is at or above $85. And IBKR, guys, they ended up doing $1.35 in EPS, which missed the $1.41 estimate. And they also missed on revenue, $1.06 billion versus $1.08 billion estimated. So they missed EPS, they missed on revenue, and again, the stock is selling off here after the bell. So let's see what direction we pick when it comes to this wedge. I have my alert at 85. I'll set another alert maybe at, let's do it at 75. Mark is at or below, just in case we start to break trend to the bottom side. So the next stock here is Nike, guys, ticker symbol NKE, which we do have a little bit of an inverse Head and Shoulders on. Do you guys see that here? If we pull it up and show you, if I pull it up and show you, we have the left shoulder here, we have the head right here, kind of. You guys notice that? And then we have the right shoulder right here. We're above the moving averages. We have a golden cross, which is nice, but now we're approaching, we're pretty much at a very big level of resistance at about $127. You guys can see that right here. Now that I'm looking at it, we also have an ascending triangle forming on Nike as well. So needless to say, guys, if we break $128, that's the big spot to watch. There's going to be a breakout on Nike. That inverse Head and Shoulders will play out. The ascending triangle will play out. And this could start going towards the highs from the end of January, being about 130. 132, maybe it starts breaking out of that point. So we do have a pretty interesting pattern here setting up on Nike, and we could also see an overall ascending triangle on the 4-hour chart that I'm drawing out right here. So needless to say, guys, 128, 130, 132, these levels are going to be sticking points for the bulls, but if we're able to break out, of course, we can get a huge leg up on Nike stock at that point, to the point where maybe we start going to 140. That was the high from back about a year ago, back in April of 2022. Maybe we go even higher than that. So before we continue on, guys, if you haven't gotten up to 15 stocks yet for Moomoo, what are you waiting for? Use that link down below or go to StasOrFest.com/Moomoo. Once you open up an account, you get 1 free share of stock. If you deposit at least $100, you get 4 more stocks, totaling 5 free shares of stock. And if you deposit at least $1,000 onto the platform, guys, it gets even better. You get 10 more stocks, totaling 15 free stocks. And they're also doing a paper trading competition right now, which runs out in the next couple of days, which if you win that, you get another up to $1,500 cash, and you get 1 month free of Benzinga Pro. So yeah, if you want a bunch of free stocks, a bunch of perks, use that Moomoo link down below. And of course, it also helps out the channel. Full disclosure, I appreciate you guys as always. And with that being said, let's continue on here with a couple more stocks before I do end up wrapping up this video. So Tesla stock, guys, let's do a quick update on this. It went down 1.5% roughly on the day, and it's just digging itself deeper and deeper into this wedge. You guys probably see it right here, right? We're making higher lows, but at the same time, we've been making lower highs for 2 months at this point, literally 2 months since the middle of February. So what direction are we going to pick? That's the $1 million question. Does Tesla end up dumping under 175 towards 165? Does it take out 165, which would be very bad for the for the bulls? Or do we end up ripping back over the moving averages, which, mind you guys, right now we're under the moving averages. We have a death cross, which is not the best sign. Do we break 195, start going 200? this could go either way at this point. And I'm sure you guys know tomorrow Tesla is reporting earnings. So yeah, you better be ready for some volatility. And best believe, guys, I'm going to be talking about Tesla tomorrow a lot because, again, they're reporting earnings and I'm expecting there to be a lot of movement in the stock, a lot of volume. So we'll see how it goes. Again, make sure to subscribe because we're going to be talking about Tesla tomorrow and we're going to be covering the earnings and we'll see what direction it ends up picking. Whether it breaks 175 on the downside or it starts breaking 195, we shall see, guys. So another one that I'm looking at here, which has an inverse head and shoulders forming, is Disney. Look at this, guys. We have the left shoulder right here. Let me draw this out so you can see it. We have the left shoulder right here. Boom. We have the head right here. You guys see that? Then we have the right shoulder forming right here. And now Disney stock has slowly been reversing. We're above the moving averages. We have a golden cross for the first time in a couple of months since really the beginning of this year, since the middle of January. So if this plays out, if this right shoulder plays out completely, we can see Disney go maybe towards 110, 15, maybe towards 120 bucks a share. That's where this thing could start breaking out to, right? So I'm going to set my alert at about 102 bucks a share. Mark is at or above, because if you guys take a look here on maybe the 5-day chart, you'll see it, or maybe even the 10-day chart, what you're going to notice is, well, we've been struggling to break 102 for quite some time at this point, a couple weeks, like 2-3 weeks roughly. You can see we've been struggling at 102. So if this does break 102, I'm telling you guys, there's going to be a lot more upside on Disney. I think it could start going to the 110s, 1-teens, maybe even towards 120 if it gets really, really hot. And full disclosure, guys, I do own Disney. It is a long-term position for me, and I don't plan on selling it. And honestly, I might even consider it as a trade if we do take out that 102 level, because again, there could be a lot more upside from that point. So the next stock, the last stock, which I did talk a little bit about earlier today, is Las Vegas Sands. I'm telling you guys, this one's also on the brinks, on the verge of breaking out. Today it went up 2%, closed a little bit under 60 bucks a share, which is where my alert's at, guys. Look at that. 60 bucks is where my alert's at. That's actually right by the high from the end of January heading into February, right? Early March as well. Now that we're breaking out of the wedge, we have a golden cross. If we take 60 bucks out, guys, this could see a massive move up as well. Mid-60s, maybe even higher than that. And if you guys didn't know, Las Vegas Sands reports earnings, I believe, later this week or early next week. Actually, no, tomorrow. Tomorrow, guys, Las Vegas Sands is reporting after the bell, so keep your eyes on it at 60 bucks. I'm telling you, if that breaks, we could have a lot more upside from that point. So with that being said, guys, I'm going to wrap up the video. If you enjoyed it, hit the like button. Make sure to subscribe. And don't forget to get up to 15 stocks from Moomoo, 12 stocks from Webull. All those are linked down below. It's literally free money, guys. And you could also check out my Patreon if you want, or the YouTube channel membership, which is right next to, I think, my name. If you're on YouTube right now, which you are watching this video on YouTube, you can click that join button and check it out if you guys want. It's the same thing. You get access to my private portfolio. You get access to just a bunch of stuff. The Discord, you get charts and ideas throughout the day. So check out the Patreon or the YouTube channel membership. And with that being said, I'll catch you guys later.